Hey everyone, me Kevin here. So in the last couple of weeks here, we've seen a lot of volatility with cryptocurrencies, which is kind of almost synonymous with cryptocurrencies, let's be real. But something really weird has happened with Bitcoin, and it goes beyond what happened here with Elon Musk. It goes a little bit beyond that. We're going to touch on that. But we're also going to touch on some of the differences between Doge and ADA, and do these really stand to gain as Bitcoin fluctuates or potentially falls? And is there maybe one that's being seen as more desirable between the two? Let's talk about that in this live stream together here. So first, I want to start with something a little odd that's been happening with Bitcoin. So what I'm going to do is first, I'm going to show you the 10-year treasury, which I know a lot of folks in crypto don't want to hear anything about treasuries. Keep it very simple. Basically, as the 10-year treasury goes up, we usually see a sell-off in tech and consumer discretionaries, especially when it happens quickly. Like this increase here is obviously much greater of a slope than the flatness we've had over here, right? But what's fascinating about the 10-year treasury is, for some reason, and this works with Bitcoin and not the other ones, when you overlay the 10-year, or you overlay Bitcoin prices on the 10-year treasury, year to date, we've had a pretty similar path. Pretty similar. When the 10-year treasury goes up, Bitcoin tends to trend up. When the 10-year treasury trends flat, Bitcoin tends to trend flat. This little Bitcoin bump right here was a little bit of an anomaly, and it's important to know that this was when the Coinbase IPO was happening, and Bitcoin ran up to like 64,000, and so we had a lot of crypto euphoria at the moment there. So I do think that explains sort of this divergence here from the chart. But this is weird. Right here, this little crash that we've sort of had in Bitcoin at the same time as we've really seen a kind of a net increase here in the 10-year treasury. And one of the things that we can talk about to break this down is not just what Elon Musk talked about, because we can go day by day on this, but I'm going to save you that and just go to the bottom line. When we had our CPI data release for consumer price inflation, the consumer price index, a measure of inflation, which I know many of us in the crypto space absolutely hate as a reference, but the market cares about it. Inflation expectations skyrocketed. The market sold off on Wednesday. Inflation expectations went through the roof. The 10-year treasury shot up from like 1.49 to 1.72. There was a dramatic bump in inflation, or inflation expectations. And we saw that in bond market, and we saw that in expectations like the 10-year break even. But what was weird was, at the same time, Bitcoin started falling along with tech and consumer discretionaries. And this was odd, because usually we look at Bitcoin as a tool to sort of protect or hedge against inflation. And so when inflation expectations skyrocketed, many of us were looking at Bitcoin going, wait a minute, Bitcoin should be skyrocketing too. But it wasn't. It was falling. And that wasn't because of Elon Musk, because Elon Musk talked about Bitcoin after this happened. Elon Musk helped Bitcoin sell off even more. But we had a really weird reversal in a trend in the way that Bitcoin usually operates in the market, where when inflation fears go up, Bitcoin goes up. In fact, a lot of folks look at Bitcoin's meteoric rise over the last 6 months as a sort of the representation of inflation expectations going up, which is exactly what we've seen in the stock market. But that is breaking apart now. And again, Elon Musk kind of helped push that down to dirt as well. And so this is really weird with Bitcoin. And it's leaving a lot of folks scratching their heads, because wait a minute, we're supposed to see Bitcoin go up with inflation. That didn't happen. On top of that, now obviously we have a lot of fear, uncertainty, and doubt around Bitcoin's energy usage, which we know that Bitcoin takes a certain amount of energy to keep the network up. And we kind of need more transactions to happen to reduce the per transaction cost of Bitcoin. So that way it doesn't look like Bitcoin uses that much energy per transaction, which right now is like 770 kilowatts, which is crazy. But we don't have more transactions in the Bitcoin network to bring that average cost per transaction down. So it looks like it uses a lot of energy, which is the energy it needs to keep the network sustained. And so we've got sort of this double negativity happening right now with Bitcoin. On one hand, you've got, wait a minute, why is it not hedging against inflation the way it should? And on the other hand, wait a minute, how are we going to get these energy costs down? Now we think, okay, well, let's just do more transactions at Bitcoin or with Bitcoin. But the problem with that is, how do you do more transactions with Bitcoin when it takes 15 minutes to process? Like, okay, well, maybe we got to get to Bitcoin 2.0, or maybe we got to get to, a new version of Bitcoin that can process blocks faster so we can actually get more transactions done for the same energy cost. But this is creating so many complexities for Bitcoin, because Bitcoin is supposed to be a deflationary currency, because there's not going to be an increase in the amount of coins that are ever created. By 2040, or mined, by 2040, we will be out of coins. There will only be essentially staking. There won't be any more mining. And so this creates some really interesting complications right now, and might help explain why maybe people are escaping to other coins, because, wait a minute, we're supposed to see it be an inflation hedge. That is broken apart. And at the same time, our path to getting more transactions done with Bitcoin is complicated just by the nature of the way Bitcoin is. Now, the argument for Bitcoin is safer. It's the proof of work model is so much safer and more infallible than any of the other coins, like Dogecoin or ADA Cardano. But then when we look at these other coins, we're like, well, wait a minute. Have we had massive security breaches at these other coins, right? And lately the answer has been no, we haven't had massive issues. And this is leading to a lot of what I like to call the flashlight in investing markets going away from Bitcoin, which leads to prices to go down. And that flashlight shining on other coins like Dogecoin and Cardano, both of which we're going to talk about here. I want to start by talking about what Mark Cuban tweeted this morning. So take a peek at this. I'm going to pull this up here. We got a tweet here from Mark Cuban. Mark Cuban says that Doge has deterministic inflation, meaning the amount of inflation is defined. There is no uncertainty as to the amount created and its inflation percentage. Now, this is true. And the cool thing about that is we have no idea how much the Federal Reserve, in coordination with Janet Yellen, are going to print next year, right? We can't predict and go, oh, well, we're going to be printing this many more dollars next year. I mean, last year, we printed like 25% of the global circulation of currency throughout modern countries and even developing countries. It's a shocking amount of printing. We had no expectation of that happening. Now, many argue that had to happen because otherwise we would have had massive deflation, because we would have gone into a recession. So we haven't really seen cryptocurrencies tested as a way to bail us out of a recession yet. Or you take the Peter Schiffian approach, which is, hey, forget it. You don't need to print more of a coin or currency. Just let businesses fail. So you've definitely got some balancing to do between fiat and crypto. But continuing on here with Mark Cuban's tweet, he says this certainty with inflation could allow Doge to grow as a valid payment mechanism. The unknown is whether enough people will use it that way. So it's an interesting argument. It's true. The unknown is, will people use it as a payment method? I think by now it's pretty much, I think we're probably 80-90% certain Elon Musk is going to accept Dogecoin or some other coin as a form of payment. But really what's happened here in the last few weeks with this sort of double attack on, it's almost really a triple attack. Let's just keep it simple. It's a double attack on Bitcoin, the inflation break apart, and the energy FUD. Both of those things have led a lot of people to spend time researching other cryptos, myself included. Okay, don't get me wrong. I am trying to learn as much as I can, and I'm looking for correlations and connections between what's happening with other coins. But what I did was I was reading a little bit about Doge, and I didn't think what I was reading was as ideal about Doge to make sense of this. And so I'm going to give you something better here. First, let me show you what I was referencing. So I came across this, and it says Dogecoin could turn into a real currency to spend rather than hoard. And this is by the Investor Place. And essentially the argument is that when you have a currency that has a slight inflationary trend, you encourage people to spend it. And this makes sense because with Bitcoin, because there's a finite supply, the more people that hodl, technically, the more the price should go up. Unless that falls apart, and, the use cases for Bitcoin fall, and maybe something like an Ethereum or something else ends up taking Bitcoin's place. Who knows? We have no idea. We don't really believe that because Bitcoin's really seen as like that number one, that entry gate, or that gateway drug to cryptos, right? Once you get into Bitcoin, you get into the other ones, but who knows? That could always change. Well, what's fascinating here is in this article, they talk about how Dogecoin is inflationary. And what they say is, look, we've got 128 billion Dogecoins circulating right now. And that every decade we add about 50 billion Dogecoin, or about 5 billion Dogecoin every year. Well, actually, I shouldn't say about, it's exactly 5 billion Dogecoin every year. Now, what's neat about that is, and I don't know if it's neat or if it's practical, but you really have I see your super chats. The problem is everyone in the super chats is pitching their own crypto coins. So anyway, okay. So the problem with Doge, or maybe it's not a problem, but the problem with Doge is by adding 5 billion Dogecoin a year, you actually, even though you're inflating the currency, eventually you have a currency that will stop inflating. And it's kind of weird to think about it that way, but take a look at this. They made this chart, which I didn't really like, so I'm going to rebuild this. They make it seem like, okay, we got this 39% inflation here at Dogecoin, then 28%, then 22%. This is really hard to grasp because we think of inflation in annual figures. So what I decided to do was make a spreadsheet. And I decided to compare the supply of Dogecoin growing at 5 billion coins per year to an annualized inflation rate. And then it becomes a lot more relative to, I feel like, our lives and like how we compare this to fiat. So take a look at this. If we have 128 billion in supply of Dogecoin now in 2021, and next year we go to 133 billion, that's an increase of a steady 5 billion every single year. And in this case, that works out to 3.9% inflation. But take a look what happens to inflation at Dogecoin. Every year, you're actually going down. So the rate of inflation is actually falling. And it's kind of falling at a decent pace here. In 20 years, we'll only be at 2.29% inflation. And if we kind of keep this chart going, because why not? I could just slap this down to, golly, I don't know how far I want to go because it gets scary. But if we go out 55 years, we only have 1.26% inflation at Doge, which potentially at some point nullifies some of the argument of, oh, it's inflationary, we'll always use it as a currency. And in my opinion, one of the things that keeps a currency going is the belief that it will be here for the long term. Now, don't get me wrong, I'm not delusional. I know that every currency that's existed before has disappeared. So everything's got its lifespan. But we don't see, well, maybe in the crypto community we do, but generally when we think of the US dollar, we don't, while we think there might be a way that a coin in the future or cryptocurrency might in the future replace it, I think a lot of us, at least a good part of us, I would say, believe that it's going to be a while for the dollar to go away. Like, we don't have that definitive end date for the dollar's functionality. And if people are thinking, hey, let's use Dogecoin because it's inflationary, well, at some point we know definitively that it's no longer inflationary on a year-by-year basis. I mean, you can't really call 0.75% inflationary anymore. We know we have this definite end date for the inflation curve. We could even chart this, which I think might be fun because I think if I just press a couple buttons here, we'll have it. Let's see if I could do it right. Nope, that's definitely the wrong way. We gotta put the chart the other way. So let's see if we can rotate, flip these around here. We want, there we go. Edit data references. We want it to be the other way around. I don't know how to make it the other way around. Maybe if I highlight the other way around, we can do this. We'll do it together. No? Okay. What if I highlight it from B to C? Chart. The point is, you're supposed to see the inflation chart go way down, right? Let's maybe just chart this. Is it gonna do this? Yeah, there. Okay. Fine. I made it easier. This is the point. The point is, yeah, sure, now it's inflationary, but eventually this converges to zero. So eventually, this will not be inflationary anymore. Like, if anybody remembers calculus, you really have this eventual convergence to zero. the inflation goes away, because at some point, continuously adding 5 billion coins becomes totally meaningless and you don't even notice it anymore. I'm not going to keep going here because I think this is just going to crash the computer. It is. But the point here is clear. It's going to converge at zero. So when people say, hey, Dogecoin's going to be a great currency because it's inflationary today. But folks, the path of Doge is charted. It's right there. So, I mean, I'm sure you could, there are ways you can maybe, fork it and maybe, actually, I think that would be brilliant for Dogecoin is, if let's say you forked a Dogecoin and you changed the rules and you said, look, we're just going to inflate at 3% a year, that would have probably been a better way to do it than this, where you're inflating at a set amount of coins per year. But then again, Dogecoin was created as a joke. So I don't know if that, but hey, maybe that was thought out. I have no idea. But keep this in mind. This is the inflation curve for Doge. And so if the big argument for using Doge is it's inflationary, that's good for currencies, right? Well, not for a long time, and the inflationness of it is rapidly declining. It's kind of like, when you have an exponential curve, you get a lot of growth at the beginning. You have a lot of decline at the beginning. You know what this looks like? This looks like the value of your car. All right. Anyway, so and I know they're gonna be like some of you now. My car goes up. Okay. You know what I mean. All right. So now what's interesting is this is a good counter argument to consider when it comes to Doge as a currency. But what we also want to look at is energy usage. And one of the things that keeps coming up when it comes to energy usage is Cardano. Now, the actual use of Cardano, how much it's actually being used, it's small right now. It's small. But the idea is maybe it can grow. And so what's fascinating about Cardano right now is that overall, at least at the moment, to maintain the system, it uses way less energy than something like a Bitcoin. Now, generally the argument, and remember this, we talked about this earlier, the argument is, oh, Bitcoin's great because it's so infallible. The proof of work model is so secure. But what if you had something that was just as secure? And we won't know this yet until breaches occur or failures occur, and we see what the defense mechanisms to those are. But one of the things that is exciting so many people about Cardano right now, and I don't own any Cardano, okay? I just want to be very transparent here. I'm not trying to bag on Bitcoin or Doge and pump Cardano. I don't have a horse in this race. In fact, to be transparent, I have some Bitcoin. By some, I've got like 200K of Bitcoin, $20 of Doge, and 0 Cardano. Okay, so I'll just put the cards on the table here. And I think I've been the most negative about Bitcoin in this video. So in fairness, I want you to know that this video is not about me. This video is just about providing some of the insights from the research that I'm doing, which that's always my goal. Like, for example, last weekend, while the SNL Dogecoin skit was happening, I was talking to a group of friends because we were watching Robinhood not take sell orders, and we're talking about why could this be happening? Oh, it's probably happening because if too many people try to sell Doge at the same time and not enough people want to buy Doge, well, like a platform like Robinhood or maybe certain other platforms won't have enough of a supply to actually let you sell because nobody's buying. And so rather than the price actually plummeting like a free market should, in a free market, you should see the price of a coin plummet. I think there was almost some kind of artificial manipulation by Robinhood to say, well, rather than let the price plummet so that people don't get pissed off at us like what happened with GameStop, let's just make it so that people can't sell until more buy the dippers come in, and then we could start pairing more buyers and sellers. It's a little bit of a jaded opinion that I have, but I mean, imagine, think about that at Robinhood for a moment. Imagine if Robinhood let the free market dictate the play with their platform, and you had a ton of sellers at the same moment. They didn't stop people's ability from selling. Well, the price would just instantly plummet. And then you'd look at Robinhood and be like, why is Doge 10 cents here and it's 50 cents somewhere else? It's a jaded opinion I have, but it's something I consider when I think about like the different platforms. And this is why crypto arbitrage exists, which I've talked about in live streams before as well over the last couple of weeks. But anyway, this energy usage, is obviously one of the two big things that folks are bagging on Bitcoin for. And we've talked about this. We also talked about its inflation failure this week. So if you're just now joining, make sure to watch the beginning part of this video because we really laid a lot of foundations in this video. Okay, so now what I want to do now is I want to take a little bit of a look after we've talked about this longer term issue with Dogecoin, which we've created a very high-end fancy chart here to show. We know about some of the energy usages. Let's go ahead and just take a moment here and look at CoinMarketCap and see a little bit how the market is trading some of the things that are going on. Keep in mind, one of the best ways you can signal to me that you like this kind of content is hit that subscribe button if you haven't yet. If you want more crypto content, subscribe. It's a big thing that's like in the dashboard, like, oh, people subscribing off your crypto videos or whatever. So if you're not subscribing, it's a very good way to vote throughout YouTube. Okay, so taking a look at Bitcoin here, it has been trending down. Now, we know a lot of this is because of Elon Musk, but it's not only because of Elon Musk. I think it has to do with that inflationary failure that we noticed. Let's do this. Let's go ahead and pull up Elon Musk's tweet. If you haven't yet, follow me on Twitter. Hey, look, there we are, at RealMeatKevin on Twitter. But let's go ahead and grab Elon Musk's sort of disastrous tweet here, which I want to say this was somewhere around 6 p.m. California time on the 13th. So the 13th was Thursday, which was the day after inflationary figures came out. So when we were on the Bloomberg terminal here referring to the failure of Bitcoin to prove itself as an inflationary hedge, that was on Wednesday, the 12th. Elon Musk's bagging on Bitcoin happened the day after and towards the end of the day. It's important to know the timing of that. I probably should have brought that up earlier, but anyway. So over the last, here, basically since mid February, we've really seen Bitcoin essentially remain flat. And you know what's fascinating is what else has really remained flat over the last few months? In my opinion, it's companies like Apple. Take a look at this. We go to an Apple chart here. Now let's go to the day chart and let's zoom out. Let's zoom out enough. And there we go. Let's keep zooming out a little bit. This is Webull. Sometimes it's a little bit slow. Which if you like Webull, consider signing up for Webull by going to mettkevin.com/Webull and depositing $100. They'll give you up to $1,850 in free stocks. But take a look at this. Apple has essentially been range bound between, these occasional little peaks that we get here, these little troughs that we get here, but it's really been bobbing consistently around 120 to 130. It's relatively flat when we look at it from this year's point of view, especially since February. And you see the same thing at some of these other more like cash plays, as Kathy would call them. Look at Amazon. I mean, Amazon's been doing this flat dance since September. It's like they had their price built in and now they remain flat. And they become way less volatile. But it's really interesting to see that Apple and Amazon almost operate a little closer to how Bitcoin's operating than how Bitcoin reacts to inflation. It's bizarre. It's weird. But yeah, it is something to consider. Okay, so let's go ahead and jump on now over to CoinMarketCap. All right. So, and I see your super chat. Thank you for the $20 super chat. I appreciate it. Yes, no, I understand there are very few transactions relative to the other coins at Cardano. I understand that. Yeah, there's a lot of research to be done on the energy usage differences between them. But there's some conclusions that we can make in this video. We're seeing an inflation break apart of Bitcoin, not responding to inflation the way we would expect it to. We're seeing it operate more like an Amazon or an Apple than anything else. So it's kind of operating a little bit more like a tech stock, which is weird. Dogecoin, on the other hand, is operating, in my opinion, very much off of media attention. The more the media flashlight is on Doge, the more we see Doge move. And this makes sense. And we saw peak media, which is something we talk about on this channel all the time because we track momentum stocks. We see peak media And then we see sell-off. We see peak media with Elon Musk and rumors about potentially accepting Doge as a form of payment or working with developers to lower transaction costs, like he tweeted about on the evening of the 13th. We see more movement in. But what I want to do is I just want to do a brief technical look at Doge, and we're going to do that at Cardano as well. So if we take a look at the minute chart, well, let's go to the 30-minute chart on Doge. That'll bring us back to about the 13th here, which is nice. It's not going to get us all the way back, though, to last week. So maybe we'll go to the hour chart. Here we go. So what we are noticing right now is as our media attention is fading, we are seeing a little bit lower volume at Doge. So it's something to keep in mind that I would expect to see maybe the next requirement for us to get a push at Doge is really going to be some kind of media event. A lot of us are expecting that to be something having to do with obviously Elon Musk. We had a Mark Cuban tweet this morning about the benefits of Doge as a currency, but quite frankly, it hasn't done any good. And we've actually seen Doge kind of rotate more to the downside. So I can't say that Mark Cuban has been helping this one. Now, on the flip side, and this is really weird, or maybe it's not, I don't know. But what we are seeing is Cardano kind of skyrocketing here. I mean, for what it is, it's moving very, very nicely here. This is on the day chart. Let's go to the hour chart here. Take a look at this push here. I mean, this is really, we started seeing uncertainty around the period of time of Elon Musk's tweets. But then all of a sudden, Cardano really did start running. And Cardano is being looked at as one of potentially lower energy usage, more security, smart contracts, and here's a key, it's not inflationary. In fact, I pulled this up. We have it here. An established supply is 45 billion ADAs that will be in circulation. It will never change. Thus, ADA coins as a precious resource. Fine, whatever. The point is, ADA is currently at least being looked at as maybe that blend of that stable supply, Bitcoin, can it be a store of value? Can it react to inflation? I don't know. And it as a low energy per transaction use cost. Now we'll see if people actually start using Cardano, how much more energy is it going to use. I think there's a lot more work to do on energy, and quite frankly, you could probably do a whole video alone on Cardano energy usage versus Doge versus Bitcoin. But these are just some interesting trends to pay attention to. And about 6 days ago, I also talked about Cardano showing some really bullish signals when we were looking at the technicals, increasing volumes. We were seeing a lot of things that were really suggesting Cardano is something that could make another move. Now we're seeing that other move. Now, with cryptocurrencies, I have not personally made big moves with my money, but that's because I feel like I'm still tracking and trying to learn my moves. When I day trade in stocks, I've been very, very successful with that this year. I don't do it much, but when I see opportunities, I love diving in on them. Yeah, this is something where the signals we were looking at when we made our last video on Cardano, they're holding, but they're also possibly being accentuated or accelerated by some of the other aspects that we're seeing when it comes to Cardano versus Bitcoin versus Doge. So hopefully this was educational and you learned something in this. I think we covered a lot of things that we're not hearing about in other videos, but I want to hear from you. So leave a comment down below. Let me know what you think about what we talked about in this video. If you like this kind of content, make sure to subscribe. Also, take a look at the awesome programs I have on building your wealth, and I teach you how to think like this in terms of any kind of asset, whether it's real estate, stocks, crypto. You can apply the psychology of money to really any of them. And I'd love for you to check out those programs down below. I'll use that code, probably expiring mid next week. I'm waiting for that date on that. But yeah, use that coupon code, folks. We'll see you in the next one. Thanks so much for being here. Bye.